Hey everyone, welcome back to the channel. Happy New Year, it's January 2026. And today, we're breaking down the Canadian market outlook for the year ahead. Let's look at the big picture based on the latest forecasts from major banks and analysts. Starting with the economy overall, growth is expected to be modest this year. Most projections from BMO, RBC, Deloitte, and others put real GDP growth in the 1-5% range, below the long-term trend but avoiding a full recession. That's similar to 2025 levels or slightly improved in some scenarios. The Bank of Canada is holding its policy rate steady at 2.25%, seen as neutral, with inflation expected to stay close to the 2% target, perhaps with a slight upward bias from lingering shelter costs and groceries, offset by lower energy prices. A major wildcard remains U.S. trade policy and tariffs. Ongoing tensions and the USMCA review scheduled for mid-year continue to create uncertainty, weighing on exports, business investment, and confidence. Many sectors, like manufacturing, autos, steel, and aluminum, have already felt impacts, with slower export growth and supply chain disruptions. If tariffs ease or exemptions hold, growth could pick up in the second half. If they escalate, it could drag GDP lower and push unemployment higher, potentially above 7% early in the year before easing. On the consumer side, spending is cautious but supportive, driven by wage growth and lower borrowing costs from past rate cuts. However, slower population growth, higher mortgage renewals at elevated rates, and trade-related job softness are headwinds. Unemployment is likely to drift up mildly before stabilizing, keeping household budgets tight. The housing market reflects this caution. National home prices are forecast to be flat or slightly down, with modest sales recovery, perhaps 7 to 8% higher activity than 2025, but still below pre-pandemic averages. Regions vary. Toronto and Vancouver may see further softness in condos due to oversupply, while more affordable markets like Calgary could hold steadier with modest gains. Overall, it's a buyer's market in many areas, with inventory elevated and prices under pressure early on. Bright spots include the digital economy, where ad spending and e-commerce continue strong growth trends into new milestones, providing some resilience. Government infrastructure and defense spending offer buffers too. In summary, 2026 shapes up as a year of steady but below-trend growth, with trade risks dominating headlines. Stability in rates and inflation helps, but vigilance on U.S. relations is key. Resilience is there, but it's a transition year toward potential stronger recovery later. What do you think, optimistic or cautious for Canada this year? Drop your thoughts in the comments. Like, subscribe for more market updates, and we'll catch you next time.